Welcome to the deep dive. Have you ever wondered how these medical technology giants manage to keep growing? And not just grow, but, really push the boundaries in healthcare.
Yeah, it's fascinating. Companies delivering these kinds of results year after year, fundamentally changing things for patients.
Exactly. So today, our mission is to kind of peel back the layers on one of the big ones, Boston Scientific. We're doing a deep dive into their Q2 2025 results.
Right, using their earnings call and press release.
Yep. Think of this as your shortcut.
Yeah.
We want to get past just the numbers and really understand the why behind their performance and maybe what's next for innovation there. So let's dig in.
Sounds good.
Okay, so straight off, Boston Scientific's Q2.
Yeah.
It wasn't just good. It was, significantly better than expected.
Yeah, the headline figures really grab your attention.
Right. Reported net sales hit, $5.061 billion? That's a 22.8% reported growth.
Which is huge. And importantly, the organic growth, stripping out currency and acquisitions.
That came in at 17%, right?
Mhm.
Way above their own guidance of 13 to 15%, right?
Way above their own guidance of 13 to 15%. Exactly. That's just real underlying strength. And profitability was there, too. Adjusted EPS hit $0.75.
Also beating their guidance. So what's your immediate take? Just a great quarter or something more?
Well, what's really remarkable, I think, is how they're doing it at this scale.
Yeah.
And the fact that they're raising their full-year guidance off the back of this.
Okay, so it suggests more than just a one-off strong quarter.
Definitely. It points towards maybe some real strategic agility. They've upped that full-year organic growth forecast now to 14% to 15%.
Up from 12% to 14% before.
Correct. And adjusted EPS, they're now projecting $2.95 to $2.99. That's 18% to 19% growth for the whole year.
Wow. And they managed this while keeping margins pretty solid.
Very solid. An adjusted operating margin of 27.6%. It really shows they're balancing that profitability with, the crucial investments they need to make.
Right, and ultimately that financial strength is what lets them invest in the tech.
Precisely. It underpins their ability to fund that groundbreaking R&D, which, leads directly to better patient care down the line.
That makes sense. So the strategic agility point is interesting. How are they pulling this off? Let's look at the engines behind this. Maybe start with the regional picture.
Sure. Well, the U.S. market was incredibly strong, grew 31% operationally.
31%. Driven by?
Mostly that powerhouse cardiovascular portfolio. But don't overlook Asia Pacific. APAC saw 15% operational growth.
15%, okay. Any standouts within APAC?
Yeah, key markets like Japan and China both delivered strong double-digit growth. Japan was actually high teens.
High teens in Japan. What's driving that?
A lot of it is their PFA technology, Farapulse. It's actually become the leading PFA tech there.
Really? Ahead of competitors?
Yep. Treated over 15,000 patients since launch, helped by new accounts opening up and their Fairwave nav system.
That's impressive penetration. And China. Always a complex market.
Well, China returned to mid-teens growth in Q2. That's a significant recovery.
It's working there.
It seems pretty diversified. Farapulse again, but also IVUS. That's the intravascular ultrasound.
Ah, right, for imaging inside vessels.
Exactly. And they expect that momentum in China to continue through the second half.
Okay. What about EME, Europe, Middle East, Africa?
That was a bit slower, grew 2% operationally, but that number is a bit misleading.
Oh, how so?
If you exclude the impact of discontinuing the Accurate valve, and we can talk more about that, growth was actually a more solid 7%.
Okay, 7% ex-Accurate. What led the growth there?
Similar themes, really. Farapulse, Watchman, and complex PCI procedures. So overall, these regional results show they're really penetrating markets effectively and adapting.
It definitely sounds like Farapulse and the whole cardiovascular segment are, central to this story.
Yeah.
Should we double-click on cardio?
Absolutely. It's definitely the core engine right now. I mean, take Watchman.
The left atrial appendage closure device.
Yeah, phenomenal 28% growth, just incredible momentum.
What's driving that 28%?
A big piece is the continued concomitant uptake in the U.S.
Concomitant meaning doing the Watchman procedure alongside another one, like ablation.
Exactly. Over 60% of the doctors implanting it are now doing concomitant procedures. Plus, the device itself, Watchman Flex Pro, got its CE mark in Europe.
Signaling a strong safety profile.
Right. And they're not stopping there. They're already developing a fourth-gen device, planning a big IDE trial next year.
Investing for the future.
Totally. And they even got expanded U.S. labeling first-line therapy now for post-ablation patients based on the option data. That's a big deal.
Wow, okay. Watchman sounds like a key pillar.
Yeah.
What else? In cardio, you mentioned Electrophysiology, EP,
Oh, EP was just, it exploded, 94% growth.
94%.
Yeah,
Yeah.
staggering. And that was largely fueled by the Farapulse PFA launch.
The pulse field ablation system we talked about in Japan.
The very same. It's gaining traction globally. Doctors seem to really like its safety profile, its predictability, its versatility.
For treating AFib.
Yep, especially for those initial de novo ablations, both paroxysmal and persistent AFib. It actually just got expanded U.S. labeling for persistent AFib, too.
So broadening its reach. Approvals expected elsewhere soon.
Yeah, they're anticipating CE mark in Europe, plus Japan and China approvals soon. And crucially, they're backing it up with clinical evidence.
Like trials.
Exactly. The Rematch AF trial is looking at redo procedures for persistent AF, and they had positive results from the 80 Advantage AF trial using their FARAPOINT catheter for atrial flutter, expecting approval for that by end of 2025.
That commitment to evidence must build confidence.
It really does. It helps solidify their position.
Okay, Watchman and EP are clear stars.
Hmm.
What about interventional cardiology, ICTX?
ICTX actually had surprisingly strong growth, too, high teens.
Surprising. Why?
Well, it's a more mature area, but they saw great performance from their Agent drug-coated balloon.
The Agent DCB.
Right, and their global imaging portfolio. And that got a nice boost because the U.S. coronary societies upgraded intravascular imaging like IVUS to Class IA.
Which is the highest recommendation, basically standard of care.
Pretty much, yeah.
Yeah.
Big endorsement. And there's good long-term reimbursement confidence for Agent DCB, too, with specific codes coming in 2027.
Solidifying its place. Anything else in ICTX?
They've got the ongoing Bolt IVL system trial that's intravascular lithotripsy. And then finally, cardiac rhythm management, CRM.
How did CRM do?
Grew 1%. Not explosive, but solid performance in their LuxDex diagnostics monitor. And they're anticipating FDA approval for the Empower leadless pacemaker by year-end.
Okay, so cardio is clearly firing on multiple cylinders. But you mentioned earlier we shouldn't forget the med-surg side of the business.
Absolutely not. It's crucial for their diversification and overall strength.
Right. So to give you, our listener, that holistic view, what's happening in med-surg, how did endoscopy do?
Endo had a strong quarter, 8% global growth, and actually hit double digits in the U.S.
Driven by?
Their key anchor products, really, things like ExaltD, single-use duodenoscopes, Mantis, Axios, Overstitch, tools for a whole range of GI procedures.
Okay, and neuromodulation?
Grew 7%. They saw really good mid-teens growth in the brain franchise, deep brain stimulation likely, and mid-single digits in pain management.
Pain, is that the Intercept device?
Yep, the spinal cord stimulation system. It just passed 50,000 patients treated, which is quite a milestone. And they successfully integrated the Relievant acquisition there, too.
Good progress. Finally, urology.
Urology showed 28% operational growth. Now, organically, it was 6%. The rest is acquisition-related.
Okay, 6% organic. What's driving that?
Mostly stone management products and prosthetic urology. Rhizome also saw double-digit growth.
Rhizome, that's the BPH therapy. Enlarged prostate.
That's the one, minimally invasive. And it just got an expanded indication for larger glands, so it can help more patients.
And the Axonics integration, how's that going?
They said it's progressing well with improvements anticipated. So yeah, across MedSurg, you see these successes really translating into better, often less invasive options for patients.
Okay, that paints a really clear picture of the sort of operational strength across the board. Now, thinking ahead, this raises the question of strategy. What are the key strategic moves underpinning this performance and setting them up for the future?
Well, acquisitions are definitely a big piece of the puzzle. They just closed the deal for Sonovi Ltd.
Sonovi, that's the renal denervation company, RDN.
Exactly. Developing tech to treat hypertension. Their TIVI US system uses intravascular ultrasound for the denervation.
And Boston Scientific sees potential there.
They seem to really believe ultrasound will be the preferred way to do RDN. And they think this could be a multi-billion-dollar market eventually. It's a big bet.
Interesting. Any other notable acquisitions?
They also picked up Entera Medical. That bolsters their interventional oncology portfolio.
How so?
It adds a complementary therapy for liver cancer, giving them more tools to offer in that space.
So acquisitions expanding into new or adjacent high-growth areas. What about adapting to changes in healthcare delivery, like ambulatory surgical centers, ASCs?
Yeah, that's a really interesting strategic angle. There's a proposed CMS rule change for 2026 that could allow ablations, like AFib ablations, to be done in ASCs.
And Boston Scientific sees that as good, bad.
They see it as a net positive for them.
Why is that? You mentioned concomitant procedures might be less common there initially.
True, but they feel the Farapulse system with its safety, predictability, and importantly, economic advantages, is really well suited for that ASC setting.
So it fits the efficiency model of an ASC.
Exactly. They expect the shift will be gradual, starting with simpler cases, but it ultimately expands patient access and could be more efficient.
Okay, switching gears slightly to financials.
Yeah.
You mentioned the accurate valve discontinuation earlier.
Mhm.
That sounds like it could have been a major drag. How did they handle it?
It was definitely a notable headwind, about a $200 million revenue impact, mostly in EMEA, and around a $100 million hit to adjusted gross margin from write-downs and reserves.
Ouch. So how did they still post such strong results?
Well, this is where the strength of the rest of the portfolio really shines. They basically managed to offset that hit through just exceptional sales performance elsewhere, plus some tight control on spending.
Shows resilience. Any other kind of macro financial points worth noting? Tariffs? Taxes?
Yeah, a couple of things. The headwind from tariffs is actually less than they previously thought, now expected around $100 million for the year, down from $200 million.
Okay, that helps.
And maybe more significantly, there was some legislation, the OBBB bill. Basically, it eliminated a potential tax headwind they were expecting in 2026.
How big a headwind?
They thought it might hit their tax rate by 200 to 300 basis points. So having that disappear is, quite positive for future profitability.
Got it. So managing headwinds, getting some tailwinds. Operationally, though, with all this growth in Watchman FARAPULSE, any worries about capacity? Can hospitals keep up?
That's always a fair question with rapid growth. They acknowledged a healthy backlog for Watchman, FARAPULSE, and those concomitant procedures.
The demand is definitely there.
Oh, yeah. But they also said hospitals are actively investing in adding more EP labs and cath labs, which is helping alleviate bottlenecks.
And the AC shift could potentially help there, too, down the line.
Could do, yeah. By moving some cases to a different setting, it's all part of what they'd call widening their moat, especially in EP.
Right. Their ambition in electrophysiology seems really high.
It is. They've explicitly stated they want to be the clear PFA leader and eventually the overall EP leader.
How are they building that moat beyond just FARAPULSE?
By broadening the whole portfolio, they're investing in mapping systems, access solutions, next-gen catheters like FARAPOINT and FARAFLEX, even developing an ICE catheter that's intracardiac echo.
So a whole ecosystem.
Exactly. And their success in Japan, coming in third to market but becoming the leader, really demonstrates they can execute that strategy effectively. It builds a strong competitive advantage.
Okay, that makes sense. What stands out to you, though, as maybe a more nuanced challenge they're facing? Perhaps on the reimbursement front.
Well, one thing they flagged is a proposed cut by Medicare to physician fees for left atrial appendage closure procedures, that Watchman procedure.
How much?
Proposed at 16%. Boston Scientific said they're committed to supporting the medical societies to, push back or mitigate that impact.
But it could potentially affect procedure volume.
It's a potential headwind, certainly. Though Boston Scientific's view is that doctors will likely continue to prioritize what's clinically best for stroke prevention, regardless of minor fee adjustments. But it's something to watch.
Definitely. So it really shows how these strategic plays, the operational execution, navigating these financial details and challenges. It all directly shapes what treatments become available and how patients access them.
Absolutely. It's not just about the company's bottom line. It has real-world impact.
Okay, so let's try to wrap this up. To recap our deep dive, Boston Scientific delivered really impressive Q2 2025 results.
Yeah, strong financials, beating expectations, raising guidance.
Driven by incredible growth across both cardiovascular, especially Watchman and EP with FARAPULSE, and also solid performance in the med-surg segments.
Right. And strategically, they're making moves with acquisitions like Sonovi and RDN and Entera in oncology.
Plus positioning themselves for future shifts, like procedures moving into ASCs, and really aiming for clear leadership in key areas like EP.
It paints a picture of a company firing on many cylinders and investing heavily in innovation.
So maybe a final thought for you, our listener, to consider. How will this increasing focus on clinical data, proving technologies work, combined with these minimally invasive innovations in new care settings like ASCs, how will all that reshape healthcare?
It's a great question. Thinking about how it changes things for patients globally in the next few years.
Exactly. It'll be fascinating to keep an eye on how companies like Boston Scientific continue to adapt, innovate, and lead in what is clearly a very dynamic environment.